Hello, everyone, and welcome. This is the Daily Finance Wrap, where you get your dose of all personal finance related news and updates, and of course, your questions answered as well. I'm your host, Avan Dabash. Do remember that this airs live every day on YouTube at 6 p.m. So we hope to see you right here every single day. Now, on our episode today, we will be putting the spotlight on thematic funds. We'll be talking about why they are all the rage, as well as understand the insights about them. And we have a very special guest who will be joining in to discuss just that, Suresh Sadagopan. He's the MD and Principal Officer of Ladder7 Wealth Planners, and he'll be sharing his insights on thematic funds. And we'll also be getting you an update on what to expect from the RBI monetary policy. So lots lined up over the next half hour, and we hope to make this interactive, so get ready. Let's begin then with all of the top stories then that we will be discussing today on the show. First up, we'll be putting the spotlight on the RBI Monetary Policy Committee. Remember, they had started their meet just yesterday. It concludes tomorrow, and we will be taking a decision this time around on the repo rates and the interest rates. Now, the expectations are rife that this time around, the Reserve Bank is absolutely going to remain and maintain its status quo decision for the repo rates. That means that it is likely to hold the repo rates at the existing 6.5%. And remember, they have undertaken this sort of a status quo for the last 9 policies. Out of the 13 economists that were polled by Bloomberg, the expectation is that only 3 economists believe that there will be a tinkering in repo rates this time around, a cut of about 25 basis points. But the majority of the economists believe that no, there is going to be a complete status quo when it comes to the interest rates. And we'll only, of course, know the actual decision come tomorrow. That is the 9th of October. Not just that, you've got the much awaited IPO, 3,000 crore rupees that is awaited of CDSL or from NSDL rather, that is the National Securities Depository Limited. And that is much awaited. Remember, this operates and handles most of the securities that are held and settled in a dematerialized form in the Indian capital markets. Now, NSDL had actually filed for its draft red herring prospectus or its DRHP last year. That was in July of 2023. And as per the DRHP, this issue is going to be a pure offer for sale where NSC and IDBI Bank are going to be selling stake. Once listed, this is going to become the second depository services company that will actually be listed on the bourses. And this is going to follow CDSL or Central Depository Services Limited, which had an absolute bumper listing. But this was a few years ago in the year 2017. So that's the other big headline. Other than that, then you've got Garuda Construction and Engineering, and that IPO sure sailed through. The kind of response that it got on day one was absolutely phenomenal. On day one, as of noon, the IPO was subscribed by 173 times. Now, do remember, this is a fresh equity sale, and they've got an offer for sale component as well. 173 crores is going to be the fresh equity sale, and about 90 crore rupees is going to be the offer for sale component. Now, 50% of this public offer that has been reserved for the qualified institutional buyers or the QIBs. You've got close to 35%, which is reserved for the retail investors, and about 15% is for non-institutional investors. The price band for this IPO, well, that is fixed at 92 to 95 rupees per share. So that is something to watch out for as well. And then let's put the spotlight on all the news within the commodities space as well, because today, if you took a look at the stock markets, it was a lot of these metal stocks that really came under fire. So put your finger on any of these names, JSPL, JSW Steel, Tata Steel, SAIL. All of these stocks were clearly under pressure in today's trading session. And that's largely on the back of the fact that the China state planner actually came out and announced a roadmap where they're going to boost the economy. But I think that completely lacked any plans for a major stimulus. And that's really what made investors very jittery, and which is why you saw a lot of these stocks back home bear the brunt of that. There was also a sharp slump that we witnessed in the SGX iron ore prices, and that clearly dragged down the manufacturers of a lot of these steel making ingredients. Meantime, you've also got updates coming in with respect to NFOs. You've got all around 11 new mutual fund NFOs, and that is going to be up for subscription in this week. So there's a whole host of names. There's the Grow Gold ETF, the Kotak MNC, The Tata Nifty Capital Markets Index Fund, that is going to be open for subscription. Now, along with that, you've got a whole host of others, the likes of the Mirae Asset Nifty 50, Helios Large and Mid Cap, the Samco Mid Cap Fund, Edelweiss Nifty 500 Mid Cap, Trust Mutual Fund, Small Cap Fund. They're all going to open for subscription later this week. There's going to be 11 NFOs, and it's going to be from 8 completely different categories. So it's going to be thematic funds, there's going to be a maturity fund, large and mid cap, ETF, small cap, all of that will be opening for subscription. So a very busy week when it comes to the NFOs. Those are all of the top stories then, but we've got our discussion which is lined up for today. And as promised, today we will be putting the spotlight on thematic funds. We want to talk about their growth, why they are all the rage. And as promised, joining in is Suresh Sadagopan, who is the MD and Principal Officer at Ladder7 Wealth Planners. Thank you so much, Suresh, for taking time out. And, just going by the kind of data points that we have, we understand that thematic funds are now the largest active category in the mutual fund space. The AUMs have more than doubled since the last year. So why are these so popular right now? Why are they all the rage?
So Avan, I'll talk about this, but probably what I'm going to say is going to pour some cold water over certain expectations. See, as far as the large caps are concerned, they are supposed to be the blue chips of the entire investing universe, and they are supposed to be rock solid, and they are basically for all kinds of situations. And now there is a mid cap category which is beyond that the first 100 large companies in the universe, and they are also potentially some of them will become large caps. See, the as far as the thematic funds are concerned, there are certain themes at certain points in time which can do pretty well, but the point that we need to check is whether they are essentially a flash in the pan, or they are a theme which is probably going to grow, and it has the potential to integrate into the larger economy itself, and has a potential to become large caps. Now, coming specifically into various themes, I mean, there are multiple themes. It can be, for example, defense manufacturing, it can be EVs, it can be any of those kind of themes. But one can never be sure which of these themes are really going to do well from the long term point of view. So my larger point is there are multiple themes. Even tourism today is a theme. So there are lots of themes. We have to be very very careful about what we are selecting, because I don't know how much of say maybe momentum will be there in these kind of things going forward. So what I typically advocate to my clients and viewers here is to look at a core portfolio which has fairly diversified portfolio. Essentially, if you look at a large cap or a large and mid cap oriented mutual fund, you will have a good diversified portfolio, which cannot be said about a thematic fund. So thematic fund can be a satellite portfolio. I mean, it has its own merits, but it should be looked at as a satellite portfolio.
Okay, fair
Aman?
enough. And you did touch upon the interesting categories, and there's so many of them that are really being developed, right? There's EV fund, tourism fund. I wonder, do you have a take on any of these new categories that are being developed?
See, Avan, I have a different take. Okay, so the point is, some of these categories are very, very interesting. Like tourism as a category is interesting. EV as a category is interesting. See, interesting may not necessarily become an investment target for somebody and having in the portfolio. So these are actually two different things. And the other thesis which I would normally advocate to an investor is that, see, if a particular category is really, really interesting, like for example, tourism is really interesting, or EVs are interesting, or business cycles are interesting. I mean, if we know that it is interesting, I think the fund manager also knows it is interesting, and it is going to come into a diversified portfolio also. So if we are really looking at looking at incorporating all the themes, all the sectors, everything in a overall portfolio, it's good to look at a flexi cap, because you are giving the mandate to the fund manager, who can actually look at what themes are working and appropriately bring all those themes, and it is going to be a diversified fund. Rather than picking and choosing a thematic fund, I would suggest a diversified fund. Probably the only exception which is thematic fund and probably can be well diversified will be maybe a special situations fund and a business cycles fund, because there it can be really diversified. So, I mean, act with caution. There is no problem about picking themes, but act with caution.
No, I understand that, you are talking about one of this being one of the risks for thematic funds, the fact that lower diversification is one of the risks. But if you had to advise, if we are looking at thematic funds, just given the kind of inflows we've seen, the kind of AUM growth that we've witnessed from the last 1 year, is there sort of a profile to the kind of investor that should be looking at thematic funds? That if this is your risk profile, then thematic funds are for you. Do you have any sort of advice on that front?
So, Avan, it's very clear that if you are really looking at a sectoral or a thematic fund, your risk profile has to be much higher than the typical normal client. So that is precisely why I said if you have a normal risk profile and you want to go to a thematic fund, you should have a core and satellite portfolio. And if you want to have, let us say, a 10 or 15% exposure in a thematic fund, where the core fund is going to have a large and mid cap exposure with a diversified portfolio, I think that is okay. Now you have to be very picky and choosy about what you have in your thematic category also. So suppose you have, for example, a tourism, okay, as a category. I don't know how many. I mean, whether it can really go too very forward on that. I would, for example, pick a defense manufacturing as a thematic category because it has just started, and in my opinion, it probably will go on for a decade or more. It looks like that at least. There are other categories which we are not 100% sure. For example, EV as a category, we are not really sure. I mean, it's not a mature category. It certainly looks like it will have potential, but again, there is a lot of EV dumping from other countries, and adoption currently is happening. But again, the charging infrastructure and all that is still not well developed. So there are multiple problems, and there are accidents in terms of EVs. EVs are burning. EVs are costly. Government is also looking at withdrawing some of the concession that it has been giving to EVs and things like that. So we don't know. I mean, so the point is, if we are not really very sure about a particular category, the prognosis for that category, the growth in that category, I would be very cautious. I would allow the fund manager to take the call. I would be invested in a multi cap or a flexi cap fund rather than picking and choosing that, except for maybe the 10-15%. So even for those people who have a good risk profile, I would still suggest a
Yeah.
core and satellite portfolio.
They're still saying just about 10 to 15%, even if you have a very high profile, high risk profile, that should be your allocation to thematic funds. So just wondering, for those investors who are deciding to put their money into these thematic funds, of course, there's a lot of risk and uncertainty, as you already flagged off, but how long really should they stay invested in thematic mutual funds? Should it be a fairly long time period? I know you spoke about a lot of these themes and the large unknowns, but what kind of time should they be giving?
So, I mean, very, very broadly speaking, as far as equity is concerned, itself is a long-term play.
Yeah.
But if you are going to be invested in a, say, diversified fund, and there is a fund manager who is actually keeping the portfolio really diversified, and they are moving in and out of stocks and keeping the portfolio diversified, you have much less to worry. Whereas if you have chosen a theme like, let us say, tourism, or you have chosen a theme like EV, you better have to keep a focus on that, because irrespective of whatever happens, the predominant majority of the underlying stocks are going to be from that particular theme, whether it is tourism or EV or defense manufacturing or whatever it is. So you have to pay more attention to these themes. I mean, if you are a slightly more actively involved investor, probably thematic fund will work well for you. If you are not really that very active, then an equity diversified fund will be a good thing. I would say not less than 3 to 5 years, even in the case of thematic, with I mean, a clear oversight of every 3 months to 6 months. One will have to look at whether these things are working or not. So thematic funds require a bit more oversight as compared to diversified funds, is what I would say, because the theme itself can go out of flavor and potentially can lag the larger index. So you have to be very careful. You have to devote more time to looking at these themes.
No, that point is absolutely taken, Suresh, given that you're flagging off a lot of these risks and we are getting some queries. Do keep the questions and queries coming. I've got one last question for Suresh, and then, we're going to get to all the questions and queries that you guys are sending out to us. So, given that you're talking about all of these risks that are associated with thematic funds, what would you say on average, Suresh, is the kind of return that investors can expect from thematic funds? And would you like to add to the list of risks?
Yeah, I mean, you first started by asking me why money is coming into thematic funds, why thematic
Yeah.
funds have kind of doubled. See, I think, I mean, investors follow the money trail, right? I mean, when the returns are good, investors troop in. So I think that has happened in the case of multiple themes which we have today, and investors are coming in. So I'm very happy for those investors who have made money in these various themes. But again, I will only say that we have to be somewhat cautious about this thing, and we have to be much more watchful regarding the thematic fund as opposed to the mainstream one. Returns potentially can be, can be something which can be much higher than a typical BSE 100 or Nifty 500 kind of thing, because it is largely very well diversified. So if you happen to pick up a theme, a proper theme which is doing well, for example, defense manufacturing, you will get a much higher return as compared to a typical diversified index or diversified fund. But having said that, I mean, there can be periods of underperformance, and you will have to ultimately look at overall, at a portfolio level, what is the kind of return that you can get. I mean, what is the kicker that you can get in a portfolio? Because I am talking about 10 to 15%. So, last point which I would say is look at your risk, look at the potential returns, because currently we are seeing only positive returns, and returns much higher than what, let us say, a Nifty 50 or a BSE 100 can give, but it can very well turn the other way. So please keep that in mind. That's a word of caution from my side. Keep that 10-15% in mind, and currently it is giving good, many of the themes are giving good returns, but keep this caution in mind and act accordingly.
Keep that caution in mind and act accordingly. All right. So nice to see a lot of our viewers as well that are participating. So we've got some live questions and queries, and we want to get them answered. So let's first up take the question coming in. I think this is from Ro. He says, are there any specific thematic funds that you're excited about right now, given the kind of trends that we're seeing?
So I had talked about a couple of them, which probably are not going to be too very time sensitive. One is a business cycle fund, and one is a special situation fund. I'm really interested in these two kinds of themes, because this can be really well diversified as opposed to, let us say, a defense manufacturing or a tourism or any one of those kind of themes. So here, business cycle fund can have multiple categories, multiple sectors, and if it is picked out well, it can really give an order of magnitude return as compared to typical index. So I'm really interested in that kind of a fund. The second is a special situation fund. It can be a turnaround case, or it can be any kind of special situation where the ownership is going from one person to another bigger entity. So in those kind of situations, then the potential for potential returns will be much higher, because there will be synergies which the new entity can probably extract. So, I mean, any kind of special situation and any kind of business cycle fund, in my opinion, is well diversified and better placed a thematic fund as compared to most other thematic funds.
Okay, I hope that got your question answered. And do remember, guys, it is on the Daily Finance Wrap that we want to take any questions or queries that you may have. We want to make it interactive. There's that comment section below, so please post in your questions and we will get your questions answered for you live. All right, we have another query, and that's coming in from Charmi Patel. She's saying, for beginner investors, would you recommend starting out with thematic funds or sticking to more diversified options first?
So, a good question, Chami, but if you are really a new investor, I would suggest you to strictly wet your feet with diversified funds. And I would suggest you to wet your feet with, let us say, a Nifty 500 fund. I mean, if you really want to participate in the market completely. Or I would suggest you to start with a Nifty 500, Nifty 50 or a BSE 100 kind of a fund to start your journey in a safe manner. The other safe way of actually starting will be a equity hybrid fund, whereby you will have a component of equity in that, and there will also be a debt or other components which are there, which will kind of provide the risk adjustment. So these are the three categories which I would broadly suggest for you. One is Nifty 500 or FlexiCap kind of category, Nifty 50, BSE 100, that is large cap oriented category, and the hybrid category. So these are the three categories which I would suggest for a beginner.
Okay, there we go. I hope we answered your question. With respect to being a beginner investor, there's a lot of options that Suresh is flagging off. Now, just to understand better, Suresh, can you just tell us a little bit more about thematic funds in terms of where exactly they invest? Of course, they are tied to a particular theme, but can you give us examples as well of some thematic funds?
Yeah, I mean, there are a whole lot of thematic funds which are available. So there are thematic funds on manufacturing. I told you about business cycle. There are services thematic funds. There are exports and services thematic funds, transport and logistic thematic funds, defense manufacturing. I have already told you. Special situations. I have already told you. So there are multiple categories of thematic funds. The only thing is, I mean, like I said, I'll probably repeat some of what I said. So you have to have the ability to pick and choose the right one. If you pick and choose the right one, obviously you are going to make a much higher return as compared to the plain vanilla index. But I mean, that's the moot point. I mean, we don't know which team is going to play out and in what time frame. So that is what we don't know. So according to me, if you ask me, probably defense manufacturing is a great theme from the slightly longer term point of view. I already shared my view regarding special situations and business cycle. In my opinion, that's a good play because the underlying will be really diversified. Transportation and logistics, I really don't know because it's a play on the economy itself. So I'm not very sure whether that is something that you can really bet on for the long term. And there are quite a few, I mean, changes which are happening in the economy. So if a lot of it, the contributions are going to be digital, transport and logistics, while it is important, that may not really benefit from what is happening in the economy. So you have to be really on top of the sectors. I mean, especially the themes, the multiple themes and the underlying sectors, to really get benefit out of that. So there are too many themes, too many plays out there. You will have to really check it out, and that's why I'm really simplifying that to three or four. That's all.
Absolutely. Point taken, Suresh. It's been a pleasure having you on board. And I hope to all of our viewers who have joined in live and asked their questions, we've been able to answer your questions and queries. Well, with that, we'll call it curtains down on this leg of the show. This is the Daily Finance Wrap. Thank you all for tuning in. Do remember that we go live daily at 6 p.m. So you can tune in as well and catch us right here. This is your daily dose of all personal finance related news. With that, it's a wrap. I'm your host, Avan Dabaj, signing off. Thanks so much for watching. Goodbye.